this week's live Technical Tuesday session where we're going to look at potential trading opportunities in the Euro USD and the US dollar Japanese yen. You know, I really love doing these Technical Tuesday sessions. I really love providing value to a lot of our free members, and this is for you guys. This is for any help that you may need. It's short, brief, 25 to 30-minute sessions where we talk about the markets and we answer any question that you may have that's trading related or anything in general. Even if you want to know something about us, just let us know. But with that said, let's move forward and let's talk about the market. So yeah, good morning, Brandon. Good morning, John. Thank you guys so much for coming. I know those are two of our premium VIP members. Thank you guys for coming. But with that said, I guess we can move forward and start analyzing these charts. And right now, we're looking at the Euro USD. And we're just going to cover maybe a little bit of what we covered last week. And I'm going to show you what I think may happen. But I want to show you how you should adapt and adjust your bias throughout the trading day or throughout the trading week. Because, of course, your bias may change and adjust based on how price responds. Remember, guys, we're primarily price action traders. We trade and we follow price, and we allow price to be our leading indicator, because if there's one indicator when it comes to trading that's the most important and most valuable indicator for you to follow, it's price. Forget about your moving averages, forget about your stochastics, all those other indicators, because those are lagging indicators. The best indicator that you can really follow is really price itself, price action, price behavior. So then, you know, we want to talk about price, but let's move forward and let's talk about what's happening on the Euro USD. And right now we're looking at the daily chart, and you can clearly see that price has broken lower, that there's been major selling on this pair really for the past few days, really ever since non-farms payroll 2 Fridays ago. We've been seeing this pair just tank, and it's really due to US dollar strength. The US dollar strength has really been the story really over the last week, and it's just been pushing this pair lower. And I know I wasn't going to do this, but even if you go to the Dixie, the US dollar index, you can clearly see on the Dixie, this is the US dollar index right here. This is sort of like a plotting of the value of the US dollar against certain currency pairs. But you can clearly see from the US dollar index on the daily chart that for consecutive days, we've been seeing this pair rally. Now, let me just zoom in and let me just count the days, because I believe it was over 8 days, but we had this bullish day, 1, 2, 3, 4, 5, 6, 7, 8. For 8 days, we saw a consecutive rally in the dollar. So then, you know, for now, we should be bullish on the dollar until we see a reason to eventually start selling the dollar. But that reason may be coming really, really soon. Now, let me exit this US dollar index, and let me go back to the Euro USD. Because on the Euro USD, we can clearly see here that we plotted this bearish flag pattern. We've been talking about this pattern for the past few Technical Tuesday sessions. Price has been trapped and has been consolidating within this pattern, but we did see a break to the downside, and price fell and created a new low for 2019, a new 2019 low, which is pretty significant, because what that can tell us is that we may see a continued bearish move to the downside. It created a low. And in order to know how trends are established by creating new structure lows and or new lower lows and new lower highs. So then that's how trends are pretty much created. I know it's the morning, guys. I'm pretty tired. I've been up. But yeah, lower lows and lower highs. That's how trends are usually defined. So in this case, we created a new 2019 low. So then we're expecting more momentum to the downside. And just like I said, for the past few weeks, if you go back to the weekly chart, you'll be able to see this a little bit better. So right now we're on the weekly chart, and we can clearly see that we have this bearish flag pattern. We see this flagpole right there. This is the flagpole, and we see this congestion, this small activity. It's not really small, but on the weekly time frame, it's small. But we see this consolidation within this flag, and price just broke to the downside. And just like I mentioned in previous meetings, we can actually see price extend or expand all the way down to around $1.10, to that $1.10 psychological level or zone where we see this hesitation candle right here. But you know, that's something that we could potentially see, and you know, we want to keep that in mind when we're trading this particular pair, that we could potentially see a bearish move all the way down to $1.10. Now let me remove this and let me go back, because just because we see a bearish move down to $1.10, which may take place over the next few weeks or even months, we don't know. But you still have to be mindful of how price moves, because price never moves in a straight line. It's always going to hit or encounter zones of supply and demand. And in this case, price is encountering a particular zone of support. If you look on your charts now, on this daily chart, we can see that price is really hovering and testing this zone of support, because support is more than just a single line. It's really a zone. So then what I want to do is draw in this zone right now on the daily chart that price is respecting. So then price is respecting this zone of daily structure support, and we may see a bounce or a correction from this particular level. You know, so then what we're going to do is go down to the 4-hour chart, because I'm going to show you what I'm thinking is going to happen. Now, as I said, we don't want to change our bias until we see signs of a reversal. So for this particular pair right now, I'm looking for an opportunity to sell. You know, that's the first thing. I'm looking to sell the Euro USD on a pullback or correction in price, because it's apparent the trend is to the downside. You know, it's pretty apparent looking at this chart. You see that we've been sliding lower for over a week. So we want to look for an opportunity to sell. Remember, the trend is your friend. You know, you want to stay on the side of the trend until you see signs that the trend may be changing, or there may be a reversal setting up. But let me just tell you what I'm looking for now as far as a sell opportunity, and then I'll tell you what I'm also looking for as well. But if you look at the 4-hour chart, you can see that we have this area of structure right around here. We have this area of structure right here. We have this area right here. I'm going to draw it in for you to see, and then we have this zone of structure support right here. This area functioned as support before, and this level or area functioned as support as well. And of course, if you go historically, you can see that this zone was a common zone of support. So then I'm expecting for this same zone or area to be respected, you know, even on a pullback in price. So then what I'm going to do is just draw in this zone right now. I'm going to change the color a bit. I'm going to make this yellow to sort of separate this and sort of, you know, give a hint that, hey, we're going to look for a selling opportunity if price hits this particular zone and area. So then what I'm going to do is draw in this zone from 1320 all the way down to 1305. Okay, around there. So then let me drag this over. So right around here. Ooh. Okay, let me know if you guys can see this zone or this box. If you guys can't, then I'll definitely change the color. But around 1305. Oh, this is good enough. But this is where we're expecting for price to potentially go and find some resistance and a selling opportunity form in the market. So then that's what we're expecting. We're expecting for price to push higher on this pair, and it may push, you know, even above this pair. You look at the way this bullish candle is forming now. There's some momentum, or, you know, the bulls are really trying to take control. we're hitting this, daily zone of support. So then we can definitely see a potential rotation in price taking place. But I want to see how price responds around this particular zone. It'll be testing the zone of structure resistance, 4-hour structure resistance, and where this 20 simple moving average is as well on the 4-hour chart. So then if price pushes into the zone, if we see signs of bearish confirmation, then we'll trade this lower. And what I would do is I'll trade this lower, in other words, execute a sell right around here. And then I would probably likely take partial profit at these lows right here. And keep the rest of my position open because I don't know how far price may slide. But I want to take partial profit. And the reason why is because I'm expecting a possible reversal pattern to form right in this zone right here. And and when I refer to a reversal pattern, I'm referring to something like a double top or, head and shoulders. In this case, what I'm expecting is a double bottom or an inverted head and shoulders pattern to form on the 4-hour chart. So then look for something like that to happen on the 4-hour chart before you change your bias or your conviction. Now, I know Marvin, Marvin, did you want to say anything? Yeah, I forgot to introduce Marvin. By the way, my name is Melvin, for those who may not know. And my brother Marvin, he's here right now. And I believe there could be a fundamental reason behind this move, right? Yeah. Good morning, everyone. Thank you guys for joining. But of course, there's always fundamental underlying reasons behind why you would want to short the euro. I know we may not have time to go over it because it's a technical analysis session, but of course, we all know that when it comes to the economics, like the fundamentals in both economies, like we see the U.S. Remaining stable, and with the U.S. earnings and just some of the economic indicators coming out of the U.S., we're seeing, I don't like to use the word a polarization, but almost like a divergence between the Eurozone and even with the U.S. So we're seeing weakness in euro. We also have the threat or the likelihood of global slowdown, and we're seeing signs of recession in the Eurozone. So then even some of this move lower, it wasn't due primarily to U.S. dollar strength, even though that was one of the chief drivers of the slide lower in the euro, but also due to euro weakness, because there's still political issues going on. I know earlier we was hearing talks about Spain, how there may be some snap elections in Spain, if they don't get their budget to pass through. So then there's a plethora of concerns to see or to support why we may see the euro slide lower. But just like Melvin mentioned earlier, movements don't happen smoothly to the downside. There's always the likelihood of it encountering support and resistance, and us seeing sort of like a gradual move to the downside or a gradual grind lower as some of these fundamental news and factors play out in the market. But yeah, like this is a technical session. Like I don't want to go too deep into the fundamentals. I know we reserve that for our private members, but yeah, like there is supportive reason behind why we would short the euro. Wait for a correction and pullback to a technical level of resistance where there's offers that could be placed there in that currency pair, and then look to short on bearish confirmation or signs that structure is changing, and you should see a bias lower to the downside. So then that's what we're looking forward to. So right now we just have to be in wait and see mode and see what happens. But yeah, that's pretty much it for the euro USD. I don't have too much to share with you guys. That's my outlook, that's my bias for this particular pair. Now, do you guys have any questions about this pair, about anything that we just mentioned on the euro USD or the fiber? That's another name you can call the euro USD. Do you guys have any questions before we move forward to our next pair? Going once, going twice. Okay. So yeah, I don't think we have any questions in regards to what's going to take place on this pair. So with that said, we can just move on to our next pair, which is the US dollar Japanese yen. And we've been watching this pair for a while now, But let's go there now. Yeah, I'm just going to stay on the 4-hour chart for the sake of time. But as you can see, price has been, slowly grinding its way lower. It was trapped in this consolidation. What was that, last week? We saw this consolidation, but we did recently get this break to the upside, and price appears to be testing the zone. And this is what we sort of predicted, guys, because remember, guys, we mentioned how price may be in the midst of a 3-drive bullish pattern, where we have, of course, this first drive right here. Let me just squeeze this down. We have this first impulsive drive, then price corrected. And then we see this second impulsive drive, then price corrected. And if you clone this line, let's clone this line and drag it to where we were, or where it should be, which is right here at this swing low, right around here. We have our third impulsive drive right here. And you can see that price pushed higher, and it's right around this zone and area that we identified before. So then this is what you call a 3-drive bullish pattern. And guys, like I said before, the market is typically harmonic in nature. There's always symmetry, and the market leaves clues on what it wants to do. And in this case, we sort of forecasted that we may see a potential push to the upside all the way up into this zone right here. And when price hits this zone, then we may see a nice opportunity to eventually enter, a selling opportunity. And that's what we're looking forward to on this particular pair. Of course, we have to see a few things first before we decide to sell this pair. Remember, we never just go in and just enter a sell. We want price to show its hand. We want price to give us an indication that we should be looking for an opportunity to sell right now. So then that's what we need to do. And I know plenty of us, we have different reasons. Some of us may look for a certain price action candlestick pattern, like a bearish engulfing candle, or some sort of, shooting star or whatever. A lot of us look at certain things, but we need to see a technical signal before we decide to do anything. And it looks like a bearish signal may be taking place, but we just need more confirmation before we decide to do anything. And if you look at the stochastics, I know I haven't talked about the stochastics in a while. The stochastics is actually overbought. Let me drag this so you can see. Stochastic is in overbought territory. So then this could signal and hint a move to the downside. We don't want to fully rely on the stochastics or any oscillator at that, because of course, even when price is overbought and oversold, it could just mean that the buyers are more dominant, and we could see a continuation of that trend to the upside. But they do come in handy from time to time. So then right here we see stochastics being overbought, and there's a possibility that we could see a nice slide lower in this pair. And for the US dollar Japanese yen, this is what could happen. If this bullish 3-drive bullish pattern is really going to be respected, then typically what we'll see price fall, or we could potentially see price fall all the way down to this area right here, where we had this last where this swing low began of this impulse move right here. So then there's a possibility that we could see price slide all the way down to this zone, or this level around 108.60 or 108.50 to 108.60. Around that particular zone and area is where we could see price go. And if price breaks this zone, then we can definitely see price slide all the way down to this area right here. But we're expecting a nice move in this pair, a nice bearish rotation in price, and possibly hundreds and hundreds of pips, which could support a grand slam trading opportunity where we have phenomenal reward to risk ratio. Now, remember, guys, I sent you guys an email a few weeks ago, I believe 2 weeks ago, on the US dollar Japanese yen and the possibility of us executing a trade that can provide a 40-to-1 reward to risk ratio. And that's actually the case. And that's the reason why we want to sit on our hands, because we want from price to give us more data before we decide to enter this Grand Slam trade opportunity. But, you know, this could potentially turn into a big winner. And for those who are our private lab or premium members, they'll have the opportunity to take advantage of this potential trading opportunity or this setup. So I'm pretty excited. I can't wait to take advantage of this move, but we have to be patient. We have to wait for the market to give us certain indications that, hey, you know, we can enter a sell trade and have a very tight stop. You know, we just have to wait for the market to provide more data for us to execute those type of trades. But that's what I'm waiting for. I'm waiting for this Grand Slam trade setup, so then hopefully it could take place. The only thing I don't like about using the US dollar Japanese yen for Grand Slam trades is that for our broker Oanda, we use Oanda. The margin that you can use for the US dollar Japanese yen is small compared to other pairs like the Euro USD. So then that means that you're going to use most of your available units in order to execute that trade. And this trade we can hold off for days. That's the only bad factor, you know, about using this Grand Slam trading approach on the US dollar Japanese yen. But is it worth it? Well, it's worth a shot. It's worth a try. So then we'll see what happens. If we can't execute any more positions on other pairs, then we'll just scale out of that Grand Slam trade and create more position or more available units for any additional trades that we execute in the market. But this is what we're setting up for, a Grand Slam trading opportunity that could, you know, really almost double your account. So then if you want something like that, then, you know, by all means, you know, consider joining our private trading community. You know, you can test it out for $1. We'll give you a 14-day trial for just $1. And who knows, you know, we may be in that Grand Slam trading opportunity within the 14-day, within your 14-day trial period. And you may be able to take advantage of something like that. So, of course, I'm not going to really sell too much to you guys. You know, I just want to let you guys know that this is exactly what we're looking forward to on the US dollar Japanese yen pair. We're looking for this pair to eventually give us a clue that, hey, the bears want to push this pair lower, and we need to look for a selling opportunity in this pair.
Yeah.
So,
yeah, I was going to say, you know, a lot of it is really due to just some profit taking, because it's been pretty overbought. Like, we've been seeing some aggressive buying and demand in the dollar, just like we saw with the Dixie. So then even some of this, what we see up here, you know, a lot of it, some of it could be due to just some profit taking, some unwinding of some dollar long positions, because a lot of the fundamentals still support more upside and an extension of the rally in US dollar Japanese yen. And also on an intermarket perspective, if you look at the futures and if you look at equities, you see that risk sentiment is in the positive. Like, there's a tone of risk appetite, so that typically favors the more upside in the US dollar versus Japanese yen. But we're not going to touch on that now.
Yeah.
That's just a little bit of intermarket analysis that we show to some of our private members.
Yeah.
But
you know, one thing I want to show, you know, it's always good to know the intermarket, the fundamentals, and what's really going on. But just like we mentioned to you guys before, you know, and what I would suggest for you guys that do want to trade for, like, you want to be full-time traders, what I would suggest is for you guys to look at certain books. Pick up a book called The Market Wizards. Pick up that book, because once you read that book, you'll understand the shift that took place with a lot of these traders when, you know, when they actually started seeing improvements, you know, in their trading, and when they became actually good and started really growing their accounts. And the shift came when they really adjusted from being strongly reliant on fundamentals to really following the technicals. And like I said, you know, we don't want to enter short yet until we see more technical clues, you know, but for the most part, there is a likelihood that we could see, you know, a short take place or sellers come in. You know, it's just the way the technicals work. Like, if there's one thing that you can rely on more than anything, is technicals, you know, over fundamentals. If you look at most traders that rely on fundamentals all the time, they tend to make a lot of mistakes. But it doesn't mean we dismiss the fundamentals. You still bear in mind what's happening fundamentally. However, if we see something technically happening in our charts that's a violation of what we may believe should happen fundamentally, then we need to just adjust it and just take the position and see what happens. Because most of the time, statistically, it's been proven that, especially the Forex currency market, it's more reliant on technicals. It follows technical patterns and technical setups a lot more better than equities does, or stocks does. So then, that's the reason why I say if you see something technically formed that supports a trading decision, then execute that trade. Of course, wait for confirmation. Don't be foolish. Wait for confirmation, but execute that position.
Yeah, yeah, and I know the reason why he really, mentions that is because, there's other variables that are responsible for why price moves the way it does. And even though you may know fundamentals, you may know the textbook of what pretty much the traditional approaches and how things should move and how currency capital flows between markets, you still don't know everything. There's still information that for us that are retail speculative traders that we just won't know until after the fact or in hindsight or later on. So then it's kind of hard to really figure out what's going on, because you got to realize these markets are influenced by institutions, by banks, hedge funds, by multinational companies that engage the market for their own particular reasons and benefits. So then we're what I would say is just taking advantage of some of the movements in price that are happening as a result of the liquidity that's current in these particular financial instruments. But just like Melvin said, like the technicals, to be honest with you, some of the technicals is really a picture and an illustration of the fundamentals.
Yeah, what's happening, the
underlying reasoning behind why prices are moving in a particular direction. So then don't dismiss the technicals or think that the fundamentals are more important. Yes, the fundamentals are solid, and you do need to know that if you want to have sustainability as a trader in this business. But the technical analysis is key, really.
Yeah, technical analysis is the most important. I would say that by far. Just like what we said here. We see here this, this technical setup. I sort of predicted, like even around here, that we may see that this 3 dry bullish pattern, that we may see price push higher, and that was something that, of course, we didn't know what was going to happen at that time, but you could see price did respond, and we pushed right into this zoning area. Now we can expect a correction. Now, how far that correction can go, we don't know. Could we still be bullish on this pair? Yes, there is a possibility for us to still be bullish on this pair. But like I said, what bodes well with most traders that I know that trade professionally, the ones that really do really, really well, they shifted their bias, they adjusted their philosophy, and they're more technical traders. Just read the market wizards, guys. It'll help you guys see that clearly. It doesn't mean you ignore the fundamentals, but you stay true to what you're seeing technically, and you trade that. You use good risk management, and you trade that, because just like what Marvin mentioned, the technicals always follows what's really happening fundamentally. The technicals follow it. So then, even if you trade technically and you rely on technical analysis, it's going to share with you, it's going to show you what's really happening in the market. But when news events come out, then you have to pay attention to that. Like if important data is released, then you have to pay attention to that. But then for the most part, what's happening right now with what the chart is showing you right now for these last few weeks is pretty much a picture of what's fundamentally happening with these pairs, with these currencies.
Yeah, so then, even with what Melvin was talking about as far as possibly send some topping here, we want to wait for the structures to take place. We want to wait for some form of, violation of the trend rules in order for us to shift our bias. But there's a plethora of reasons that I have to support why I believe U.S. dollar versus Japanese yen will continue to go higher. If you look at the treasury market, treasury yields, if you look at equities, futures, and, and the other factors that we don't have time to pretty much go into right now, it's supporting an extension of this rally to the upside. This, in my opinion, is just simply, some profit taking, and we may get a slight pullback or some consolidation ahead of a further extension to the upside. So that's just, my opinion.
Yeah. Yeah, but we'll see what happens on this particular pair, because of course, we have our forecasts and we have our predictions. That's one thing you need to know about trading is that everyone has a forecast, everyone has a prediction, but it doesn't mean that you're right all the time. And this is where good money management and risk management comes in. Because whenever you're wrong, then at least you understood that, hey, I need to only lose a certain amount on this position. And if you do lose, then it's okay. Because losers are a part of this business of trading. If you're not able to handle losses from time to time, then you may need to find another trade or another profession. If you want to be a professional trader, you will lose. And sometimes you may lose 2 to 3 times in a row, 4 times in a row. Sometimes it happens. Sometimes you go in a losing streak. It's just like any other sports team. Look at the Golden State Warriors. I mean, a few times throughout the year, they may have a back-to-back loss.
Yeah, those are for those that are in the United States.
Yeah, that know basketball. Most people know Golden State Warriors. But, yeah, like the thing is, you may have a consecutive loss, or 3 consecutive losses in a row. Even though you're a stellar team, you're one of the best teams, sport teams. It could be any team. You guys know sports, but you can go through a losing streak, and it doesn't mean that you're a bad team. It just means that, hey, you're just in that funk. You're in that trading bad spell, but you're going to eventually get out as long as you execute properly. But that's that, guys. I don't want to hijack too much of your time. I know we're at the end of our session. Are there any questions about this pair in particular before we move forward, or before we end this session? But are there any questions about anything? Going once, going twice. Okay. Well, I guess there aren't any questions. That's it, guys. If you do have questions, you can always contact us privately. Just go to our contact or support form and just submit an email asking us anything that you feel may help you make a certain decision as far as trading. But for the most part, we do offer weekly. We do offer sessions multiple times a week, and we do have video tutorials and trainings on everything that we're talking about now and even more. Like, if you thought this was good information, trust me, guys, we have even better information within our private members area. Like, I guess Brandon or John, what do you like? Do you think well, yeah, okay, then I know Marvin's telling me to shut it down now, but I was going to ask him a question and what their opinion is, as far as the video tutorials and video teachings within our private group. But we don't have to do that for now. We can just move forward and end this presentation. But yeah, to remind you guys, we do still have the $1 trial. So if you guys want to take that $1 trial and want to see how we trade and be involved and participate within our private community, you can. We definitely want to really add more features to the group. I know we added a few more homework and quiz assignments back there for those that really want to learn. So you guys can go back there, log into your members area, and study the material, and then take homework and quizzes that can help you develop as a trader. And also, we're going to add some other features as well, some stuff that we're looking into right now. But that's that, guys. I don't want to hold you guys hostage. Thank you guys so much for coming to today's session, and we'll definitely see you guys next week. So yeah, and this recording will come out. It'll be sent to you guys sometime later today, so then be on the lookout for that. But that's it, guys. I don't have too much to share with you guys. I hope this was really helpful. Let us know if you really enjoyed this video. If you're watching the recording, please make sure you share, like, and even comment below, because the more you share, the more you like, the more you comment, it really helps us out. It helps get the word out about what we're doing as far as these Technical Tuesday sessions, because we want to really help traders. We know not everyone's able to join our private community, but at least we can offer a little bit of help with these free Technical Tuesday sessions. So then I hope you really enjoyed and found value in this session, and that you guys can help us out. Just share it, comment, like it, do whatever you can to help us get the word out about what we're doing.
Yeah, find us on Facebook, Twitter, and Instagram.
Yeah. I know we're on. Yeah, Marvin, did you want to talk about that? Like, I don't know the Twitter handle and all that stuff. But if you want to, you can
you can just follow us, on Twitter, Instagram, Facebook page, like our Facebook page. Sometimes we share information through Instagram and through our Twitter account. So then it'll be good. There'll be some incentive for you guys to follow us. But I think for most of them, our handle is at FX Anatomy. Let me just type that in right now. The @ sign at FX Anatomy. That's our Twitter handle, and you can just look for us there and follow us there.
Is that Instagram too?
Yes, that's Instagram as well.
Okay. So there you have it, guys. That's it, guys. We don't have too much to share with you guys, but thanks again.
Yeah, and you can just also type just Forex Anatomy in Instagram as well.
Yeah. Okay. So yeah, guys. All right. So with that said, I guess we can end today's Technical Tuesday session. We hope that you guys have a very, very blessed day of trading, and we'll see you guys next week. Have a wonderful day of trading. All right. Talk to you guys soon. All right. Okay, then, bye.